Hello, welcome to Finance and Accounting Tutorials. My name is Peter and I will be your host in this particular tutorial. Kindly don't forget to subscribe to my YouTube channel so that you can have access to all new tutorials that are coming in each and every day. Today I want us to look at the topic accounting for assets and liabilities. We are going to base today's explanation on disposals of assets. You find that a firm can dispose of an asset in three different ways. The first way is through selling the asset. The second way is when an asset is written off after it is damaged or it is involved in an accident or the asset is stolen. The third and last way in which a company can dispose of an asset is if the asset becomes obsolete, it is scrapped off or it is no longer in use and therefore it is disposed of. To understand the disposal of assets, we are going to look at an illustration, and this illustration is going to help us understand how to treat a disposal of an asset in an organization. So the illustration reads that the following transactions belong to a company which depreciates its plant at the rate of 20% per annum, straight line method, for each month of ownership. So you're given the transactions from the year 2005 all the way to the year 2008. So in 2005, the company bought plant costing shillings 900 on 1st of January, then bought another plant costing shillings 600 on 1st of October, and in 2007 they bought plant costing shillings 550 on 1st of July. In 2008 sold plant which had been bought for shillings 900 on 1st January 2005. So this asset here, which is plant, is the asset that was bought on 1st of January, and the asset was worth shillings 900. So it was sold out on 30th September 2008 and it was sold at a sum of shillings 275. Required. From the above details, draw up 1. The plant account, 2. The provision for depreciation account, and 3. The plant disposal account, and lastly you required the extracts from the balance sheet as at the end of each year. So let's look at how you expected to solve this particular problem. So the first thing that we are going to look at is the plant account. So like we said earlier, plant is an asset, and as we know, non-current assets will have debit balances. Therefore, in our plant account, the assets that were acquired will have debit balances, and whenever you acquire an asset through purchasing, the item that is affected is cash and bank. Cash and bank are found in the cash book, and therefore generally the cash book is the item that is credited when you are debiting the plant account or the asset account. We start with the first year. In 2005, on 1st of January, the company acquired a plant that was costing shillings 900, and as we have said, when you buy plant worth 900 shillings, this amount is deducted from the cash book. So the cash book is the item that will be affected, and it will actually be credited. For the double entry to be observed, then you're going to debit the plant account, then credit the cash book. Then on 1st of October there was another plant that was acquired at a sum of shillings 600, and that's where we have the cash book being affected. So in total, in 2005, we acquired assets worth 1,500. To balance off these, we are going to carry down as at the end of that year, which will be on 31st of December, we are going to carry down the same amount of 1,500 to have 1,500 on what as the balance carried down, and the balance will be 1,500. When you go to the next year, 2006, we are going to begin this year with the assets that were there at the end of the last period. So the balances that were carried down in 2005 will be brought down in 2006. So on 1st of January, the beginning of 2006, we are going to bring down an amount of 1,500. Then this year, you'll find that from the transactions that we have been given, no asset was acquired, and therefore we need to balance it off as at that particular date. So we have 1,500 as the balance carried down at the end of the year 2006, and you balance it off at 1,500. In 2007, we are going to start with the amount that was carried down in 2006. That will be our opening balances of plant in 2007. So the balances brought forward or brought down is 1,500, which is our amount carried down here. Then in this year 2007, they had acquired an asset. A plant was acquired on 1st of July, and this asset was costing shillings 550. So to get the total of assets during this year, we are going to add the balance brought down to the asset that was bought, and we have a total of shillings 2,050. To balance these at the end of the period, we are going to carry down shillings 2,050, and we have our balancing figure. In 2008, there is a transaction that occurred. This is the year when an asset that was bought on 1st of January, the asset worth 900 shillings, was disposed. Therefore, we are going to reduce the plant. Remember, we said that plant has got a debit balance. It is an asset. And when you reduce an asset, you're supposed to credit, and therefore it will be affected by the disposal. The asset that is being disposed is going to reduce the value of our assets. The asset is being disposed on 30th of September. So we are going to credit the plant account, and amount is 900. Then on 1st of January, without forgetting, we are going to start with that amount that we had carried down in the previous period of 2,050. So we have it here. So to balance off the transaction in 2008, we are going to carry down 1,550, and we'll have a balancing figure of 2,050. So the 1,050 here, this is the value of assets that are remaining at the end of the period. So as at 31st of December 2008, we have the value of assets as 1,150. Next, we are going to move to the provision for depreciation account. For us to do the provision for depreciation, we have to determine the depreciation for each period. So for us to calculate the depreciation, we'll need the following items: the period, the cost of the asset, which in this case is the plant, and the months that we are going to depreciate the assets. Let's start with the first year. In 2005, on 1st of January, there was an asset that was acquired worth 900. This asset being acquired on 1st of January, it means that for the whole year of 2005, the asset was in the company, and therefore we are going to calculate the depreciation over the 12 months. We have been given the depreciation rate as 20% per annum, and therefore the depreciation of 2005 for the asset costing 900 will be 20 out of 100 of the cost, which is 900, times the total months which the asset was in the organization, which is 12 out of 12, and the depreciation will be 180. On 1st of October, they acquired another asset worth 600 shillings. So this asset, being that it was acquired on 1st of October, it was only there for the months of October, November, and December. So we'll have 3 months. So the asset will be in the organization for a total of 3 months. So we are going to get the depreciation 20 out of 100 of the cost 600 and the duration in which the asset was in the organization in the year 2005, which is 3 out of 12, and the depreciation is 30 shillings. So the total depreciation for the year 2005 will be 180 plus 30, which is 210. In 2006, we started with the balance brought down of 1,500, and there is no asset that was acquired in this period. So this figure, these assets are the only assets that we had during the year. And being that the balance was brought down at the beginning of the period, then it means that the assets will be in use for that whole year. So for the year 2006, the depreciation will be calculated for the whole year, which is 12 months. So 20 out of 20% of 1,500 for the 12 months will be 300, and this is the total depreciation for the year 2006. In 2007, on 1st of January, again we brought down asset costing 1,500 from the year 2006, and again these assets will be in use for a whole year, and that will be 20% of 1,500, which is 300. But in this year 2007, the company acquired an asset on 1st of July, and the asset was worth 550. So if you look at that, from 1st of July up to 31st of December, the asset will be in the organization for 6 months. Therefore, depreciation will be calculated for 6 months in the year 2007. So 20% of 550, and the asset will be there for 6 out of the 12 months in the year 2007. Then the depreciation will be shillings 55. Adding that to shillings 300, we have a total of 355 as the total depreciation in the year 2007. In 2008, we have a transaction of disposal. On 30th of September, an asset that was bought on the 1st of January of 2005 was disposed of. So this asset was disposed of on 30th of September. So to get the depreciation in the year 2008 for the asset that was disposed, which is worth 900, the asset will be there from the 1st of January of 2008 up to 30th of September of 2008. That is a total of 9 months. So the asset will be in use in 2008 from January up to September when it is sold out, and therefore the depreciation that it will have accumulated before it is sold out on 30th of September will be 20% of 900 multiplied by 9 out of 12, where 9 is the total months that the asset was used in 2008. That gives us a total depreciation of 135. On 31st of December, if you look at that, we had a balance that was carried down after disposing of an asset worth 900 shillings. There is an asset, the total number of assets remaining in the company was 1,150. So this asset was in use for the whole year, that is from January 2008 to 31st of December of the same year. So the depreciation accumulated by the remaining assets after disposal will be 20% of 1,150, which will give you 230. So 230 added to 135 will give us the total depreciation for 2008, which will be 365 shillings. I wanted to mention something before we go to the next level: the depreciation of the asset that was disposed of. If we were to calculate the depreciation for this particular asset for the period that it was in use in that organization, you find that this asset was acquired on 1st of January 2005. So in 2005 only, the asset accumulated a depreciation of 180. In 2006, if we were to look for the depreciation of this asset only, the value is 900. We depreciate it at 20% again, we'll have 180. The same way to 2007. So the asset in the 3 years will accumulate a depreciation of 180 each year. For the 3 years, it will have accumulated a depreciation of shillings 540. Adding that to the depreciation that the asset will have accumulated in the last year, which is 2008, of 135, we get the total depreciation accumulated by the asset as 675. We are going to see where that figure will be applicable. Now, having calculated the depreciation, we can now look at provision for depreciation account. So like we said earlier, provision for depreciation reduces the asset value. As you know, depreciation is an expense to a company, and in the income statement or the statement of comprehensive income, expenses are debited. So, to apply the double entry system, the provision for depreciation account will be credited, but in the income statement will have a debit balance. Therefore, that is why you find that the balances for the provision for depreciation in the provision for depreciation account will be on the credit side. So we start with the first year. In 2005, the provision for depreciation, remember, is determined at the end of the period, just like we have done in the calculation for the depreciation, which we were calculating it for the whole year. So the provision is based on a whole year and therefore is provided for at the end of the period. So in 2005, on 31st of December, the amount that will be debited in the income statement will be the total depreciation for 2005, which we got 210 shillings. To balance off the account as at 2005, we are going to carry down figure of 210 and we balance it off as at that. Let's move to the next year. In 2006, we are going to start to open up the year with the provision for depreciation that were carried out in the previous period. So the balances brought forward from 2005 will be 210 on 1st of January. On 31st of December of 2006, the total provisions for depreciation that will be posted in the income statement equals to 300 shillings. Adding up 300 to 210, you have 510. To balance off the account, you carry down 510. Balance it off with 510. In 2007, again, we are going to start with the amount that is brought down from the previous period, which is 510 shillings. So you have your figure brought down of 510. Then on 31st of December of 2007, the figure that will be posted to the income statement is 355. This is the total depreciation in 2007. Then the total, when you add 510 and 355, you have 865. You carry down that and you balance it off, it's 865. In 2008 again, we are going to bring down, or the figure that is brought forward from the year 2007 would be our opening balance as at the 1st of January of 2008. So we have the figure as 865. On 31st of December, we have an income, the value to be taken to the income statement, or the accumulated depreciation as at the end of the year 2008. As we calculated it, this is the depreciation or the accumulation on depreciation for the remaining assets after disposal, and the total was coming to 365. We are disposing of an asset, and when we dispose the asset off, then it means that the depreciation, again, we are going to reduce it by the figure of accumulated depreciation of that asset that we are disposing of. I had mentioned this figure earlier. We said that this asset was acquired on 1st of January 2005. In 2005, it accumulated a depreciation of 20% of 900, which is 180. In 2006, the same 180. In 2007, the same 180. That is 540 plus the depreciation that it accumulated for the 9 months it was in use in 2008, which was 135. So when you add 135 and 540, you have a total depreciation of 675. That's the depreciation for the assets that we are disposing of. So that will reduce the total depreciation, the total provision for depreciation, and that's why we put it on the debit side of this account. We are going to carry down 555 for account to balance at 1,230. So that is the provision for depreciation account. The third item that we were required to prepare is the planned disposal account. The planned disposal account is an account that comes about when we sell out or when we dispose an asset in the various ways that we looked at the beginning of this tutorial. So here in 2008, we disposed of an asset that costed 900 shillings, and when we disposed this asset, the company acquired some money. It sold it out at shillings 275, and this asset was sold out on 30th of September. So that is the transaction that we are going to represent in this account. So plant disposal account. A plant is an asset, and assets have got debit balance, right? Therefore, if you dispose of an asset, you're supposed to credit the asset account or the plant account. And for you to apply the double entry rule, when you credit the plant account, you have to debit the plant disposal account. That's why we have debited on 30th of September 2008, we have debited the plant disposal account 900 shillings. This figure is going to affect the plant account, which will be credited. In the same period, we have a provision for depreciation. Remember, this provision for depreciation, in the provision for depreciation account, it was debited. And to comply with the double entry rule, you credit the plant disposal account with 675, which is the total depreciation for this asset that is being disposed. The same period, when we sold out this asset, we acquired some cash. So you're going to debit the cash book. Remember, we are receiving the money and therefore we are increasing our cash or bank. So that is a debit for our cash book. So this item is going to affect the cash book. So when you debit the cash book, you're going to credit the plant disposal account, and that's where we have on 30th of September cash book 275. When you total up 675 plus 275, you have 950. To balance off our account, we are going to carry down, and the figure that we are carrying down is 50 shillings. When you add 50 and 900, you have 950. So the 50 shillings we are carrying down here will be taken to the profit and loss account. Taking you back to the profit and loss account, in the income statement, or what we call the statement of comprehensive income, profits, what we call expenses, are normally debited. Any incomes are credited. The figure here is a debit in plant disposal account. So for you to apply the double entry rule, you have to credit the income statement or the profit and loss account in the income statement, and the item that is normally credited is the income, and therefore this is a gain or profit on disposal of 50 shillings. So you have that. Then in 2006, the same. In 2007 and 2008, you subtract the total depreciation to get the net book value. I would like to encourage you to subscribe to my YouTube channel for you to have access to the coming tutorials. Kindly don't miss any of our coming tutorials. I appreciate very much for you taking my time listening to this tutorial, and I hope you now understand how to treat disposal of assets in an organization. Thank you very much. My name is Peter, your host in these finance and accounting tutorials. For any queries, kindly contact me via the contact above. Thank you very much. I do appreciate